A healthy real estate market is bad for your personal health. Find out why. Hello and welcome to Clearance Rate, a full wrap of the nation's residential property market over the last week. And while selling might be good for your financial health, it seems that buying isn't. Research from St George Bank has found the majority of people looking to buy have not reacted well to the growing dominance of auction sales as a method to sell housing. Now, roughly half admitting that looking for a home negatively affects their work, health and relationships due to the time and resources required. And of course, the stress at the auctions when you don't quite get the property that you're after. New South Wales real estate editor Tim McIntyre is with me. Tim, it can be really stressful at an auction and you get so emotionally attached to it, especially if you're buying not so much as an investment but as your own home.
Well, when you spend like 6 or 8 months or even longer looking for properties for all that time only to keep missing out, then yeah, it does start to get you down and put a bit of strain on the relationships. But well, let's have a look at what happened this week to see exactly.
Clearance rates down slightly, volumes down slightly on last week, but if you compare that to the same time last year, we're still seeing a stellar of a selling market out there.
Yeah, well, there's no reason to be concerned about an 85.5% clearance rate or even a lower volume of auctions. It'll pick up again over the next couple of weeks.
And in terms of private house sales, what are we seeing on that? Still growth up in that average median selling price?
Yeah, the median still seems to be getting away from us, at least in Sydney and Melbourne picking up as well now. Apart from that, the other markets are a little bit quieter, but Sydney, Melbourne and even Brisbane have a lot of volume at the moment for private treaty. It's
almost getting a little bit boring. We seem to be saying the same thing every single week. Sydney and Melbourne charging forward, the others just easing off and stabilising. When will we see Sydney and Melbourne stabilise somewhat? Look at those apartment prices.
Well, Melbourne's due to stabilise quite soon because there is an existing oversupply of properties especially in the inner city, with plenty of developments getting underway, regardless of whether there's the demand for them. Sydney doesn't have that problem. Sydney's going to be a couple of years more before we start to see a real stabilisation, just because the supply is not there, the demand is huge, the interest rates are low, and there's nothing happening to change any of that.
All right, let's check out that weekly price direction. And Melbourne just easing back. As you mentioned, obviously, there is enough property there, so buyers perhaps not being so frenzied as they are in that Sydney market.
No, that's right. Like there has been a lot of confidence coming into the market this year, and Melbourne's been going quite well, but it is just coming off a little bit. And Sydney for the second week in a row hasn't actually grown, which is a minor miracle. That doesn't happen very often.
Yeah, almost that's a stop the press moment, isn't it? Because we haven't seen that for some 14 odd months.
No, that's right. But still, until we see that annual change start coming down below 10%, then you can't, like every week the yearly growth is still the same. So it's pretty amazing
that's
stuff.
Right. All right, time now for our weekly sticky beak into some of the properties that sold and the gastronomical amounts that they sold for. What have you got?
Well, we're looking at some that sold for a big over reserve this week, and this one in Mona Vale is sort of like a downsizing place, and it went for $428,000 above the reserve price.
So is this two properties here or one?
It's just one. This is just one side of it, the number 11. And 2.378 million was the property, and you got to say, when this is a downsizer's place, there'll be a few kids out there who would have seen their inheritance burn just at that auction on the day.
Yeah, that's right. It really is downsizing into that sort of price. You're not really leaving much to put into the super fund to live off. And what about this one? Similar money, I'd imagine.
Yeah, well, this one's in Haberfield. It sold for 2.62 million, which was 320,000 over reserve. It just goes to show that even a house that just doesn't look like anything special, bear in mind it's still got a couple of million behind it.
If you are within that 10-kilometre radius of the CBD of Sydney, your property, no matter what state it is in, if it is 200 square metres or more, it's going to get close to $2 million.
Big time, big time. And this last one is two houses in a row. Sold at the same auction to the same buyer for a combined 180,000 over reserve, and this is out in a pretty quiet, like cheapish suburb. So
right out west, actually, isn't it?
Yeah, it is. It's and
is that developers there buying two blocks next to each other, or?
Well, all up, the land was about 1,200 square metres, right. And you can imagine that these two fibros will be gone within the coming years, and we'll see something developed, either better houses or more properties.
If we see more apartments get built in these outer suburbs of Sydney, does that basically ease the demand a little bit, where we see those prices just come off a bit closer, or is it just going to push those ones closer even higher?
Well, look, it would see the demand come come off a little bit, except I feel that what will actually get built on that block, because you've got to have a good market for apartments to build apartments. So that block will be a couple of better houses or even 3 houses, and they'll then on-sell that or use the equity to invest in something else.
All right, well, that is clearance rate for today. More again next week. Hopefully not too pricey.